Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have a Bitcoin slash cryptocurrency market update video for January the 17th. We just had our daily close about 9 minutes ago. I haven't really looked at charts much this weekend, so we'll kind of go through this together. I'll go a little bit off the cuff, and we'll see what I see in the markets. Before I jump into the content for this video, please do me a huge favor, hit that thumbs up button. Make sure you subscribe to the channel if you have not already. And of course, don't forget to check the description. There's a link down there for you to join Patreon. You'll get access to much more frequent updates. Some days it's multiple updates, some days it's only one update. But I do updates pretty much on a daily basis for the Patreon members. So when I look at this CME chart, the real thing that I want to keep an eye on is I want to keep an eye on this top, because right now it's representing a potential double top and it's not yet confirmed. I like to play these fairly conservative, so I'd really like to see it break this neckline way down here at 31K. And when I say break it, I mean close a daily candle underneath that level before I start thinking about deep downside and deep retracements back down to fill in some of these gaps. The market was pretty brutal. It was pretty mean, and it did some sneaky stuff over the weekend. I know it caught some people off guard, so let me kind of jump between charts a little bit. If you look at a Coinbase chart, they were representing that same double top, and if you were playing it kind of aggressively, you might have said, well, this is my neckline here, and they threw this tail down just below that neckline. And of course, if you shorted there, it was a nasty bear trap, and they pumped it back up about 10% or so. There's a ton of volatility in the market right now. Now, volatility is good for traders because we love volatility. That's how we make a lot of money. Volatility is bad if you are an investor because it scares a lot of people off. People don't like to invest in things that are super volatile, going up and down, up and down. And also, high levels of volatility tend to signal trend reversals. So for example, when you have a lot of volatility after an up move, a lot of times that ends up playing out as distribution. And when you have a lot of volatility as a down move, a lot of times that ends up being accumulation. So we'll have to wait and see how that plays out. But yeah, this chart right here, if we do, and this is pretty far down there, if we do end up taking out this line, then I would start looking for some of these gaps to fill. This gap is obviously filled already, right? But this gap down here is still alive and well, down around 24K, and this gap down here around 18.5K, and this long forgotten gap down around $9,600. Those are all legitimate targets on a larger time frame. I'm not talking about this week, right? But on a larger time frame, they are still legitimate targets. And of course, if we put Fibonacci levels from 42.10 on the CME to the top at 42.7, we can see that golden pockets coming down around 17.6 to 18.9. Lines up quite nicely with this gap. And then at 80% retracement, we'll put this back down around 12K, which would still be pretty high, still pretty far above this gap. So this gap may be one of those gaps that simply never gets filled in. We'll have to wait and see. One thing to keep in mind is this obviously has been a very parabolic advance. So if we do start moving down, you have to be careful, and make sure that you're not confusing a new bear market for a correction. And again, we don't know if it's going to be a bear market. We don't know if it's going to be a correction. We don't know yet. So I don't want to get too far ahead of myself. I'm simply saying be careful, because back in 2017, of course, everybody thought this was a correction. It got this really nice bounce, and then all of a sudden, what happened? The market, really, really corrected back down to that 3K level. So typically after these really large increases like this, textbook says 80% retracement. Again, that's down around 12K. But if this ends up being something more than that, and I'll talk about stocks a little bit in this video, explain some scenarios. If this did end up being like a full actual bear market type of deal, if this was the top and not just a local top, Bitcoin loves its 80 to 90% retracements, which will put it back down around like 6K or so. So we'll have to wait and see how that plays out. I think it's way too early to start talking about those types of targets right now. For right now, I just want to pay more attention to the smaller time frames and trade what's in front of me. There's plenty of volatility when you're getting 5 and 10% moves on a daily basis. You can make a ton of money just trading those moves and not really worry about the rest of it. So that's kind of what I'm seeing on the CME. If we take a look at a regular Bitcoin chart, like a Coinbase chart here, again, that was a level that I was watching on the daily chart there. I still think it's super important that we do get some type of retracement. If we are looking at a retracement, let's just say hypothetically from September, right? Just from this 3 or 4 month rally up to the top here, we did come down very, very close to this 38.2, got a really nice bounce off of it. I tend to believe that at the very least, this is probably going to be something like this, right? Which will put it down around 21 to 22K, somewhere in that ballpark. But I don't see any signs right now that are making me say, well, I just want to jump into short and try to ride this. Again, with the volatility the way it is, doesn't really make sense to try to sit in the trade. It's a whole lot more money to move in and out of the trades when the markets are moving like this. You know, get in for 3%, get in for 5%, get in for 2% over and over and over again. So that's kind of what, you know, my strategy has been here lately. It's just to be very fluid with the market. One thing I do want to point out, and again, you know, I'm not doing a lot of these videos this year, so, you know, bear with me here. You know, I would love to do this the day this candle closed, but, you know, I may or may not do a video next week. But one thing I'm going to keep an eye on is this 12-day chart. Some of you know this, some of you may not, but I prefer the 12-day chart for position trades. I find that it moves faster than the monthly, which gives some good signals, but not so fast as a daily or 3-day or even a weekly, where you're going to get a lot of false signals. This top over here, it is coming in quite a bit like 2017 and like 2019, but a lot can change in 7 days. So I don't want to get too far into this other than to say keep an eye on it 7 days from now, check it, see how it compares to the top in 2017, see how it compares to the top in 2019. It may look totally different, right? Also, you may want to use a log chart because a log chart is going to give you a better perspective on comparing apples to apples. You know, when you're up here, obviously these wicks look even larger than these wicks back here, but in reality, when they're percentage based, they're pretty close to the same size of these other wicks, okay? And in both cases, in 2017 and 2019, the very next candle did come up, try to test the previous top. I think in 2017 it actually even eclipsed it just a bit, and then, you know, we got the big move. Here was 84% down, here was about 74% down. I think it was 74%, yeah, 72.18%, sorry. So, you know, again, if we do get some type of, say, 72% move down, that would be down around 11K or so. And if we did get an 84% move down, that would be down around 6,600, which I know sounds pretty absurd. So, again, want to play that level by level. One of the more concerning things with Bitcoin right now is, you know, I've had this opinion for quite a while now that the market's in a blow-off top. I've had this opinion that we are in a macro level bubble, right, on Bitcoin that started back in 2010. And, you know, even though the market has moved up to 30 or 40K, you're going to have one side who says, well, you know, you're obviously wrong. The market's moved up, you know, 1,000%. How can you possibly still believe that? But the reality is that's exactly the type of market behavior you would expect to see in a blow-off top, if it is indeed a blow-off top, right? I thought that this was probably the blow-off top and that this was maybe complacency on a macro level. It turns out that was, you know, wrong, and it could be that we are now entering, you know, a blow-off top. Could also be that this is just the start of a new bull market and that we're going to get corrections and, you know, continue on up to $100,000, $200,000. We really don't know. But what concerns me is not so much just Bitcoin. It's when you start looking at stocks side by side with Bitcoin. So, for example, okay, obviously there are thousands of stocks, right? So it's important to keep in mind that with thousands of stocks, you're bound to have some similarities between stocks and crypto, but I think it's more than that. If we take a look, if we put, you know, cryptocurrency here, this is a monthly chart. We'll put this on a non-log chart, and we'll just look at kind of the last 2 or 3 years. And then if we take a look at this stock here, which is Grow Generation Corporation, we're going to see some very similar action. Let's put it on a log chart, put this on a log chart. And what you basically have was this top back here, right? This was December of 2017 for crypto. This was January of 2018 for this stock. You had this bottom here at the end of 2018. Just like right here, you had a bottom in this stock. You had a pump in the summer of 2019. You had a pump. This actually went all the way to August, and over here was even early 2020 on this stock. So a little bit different on the timeline. You had the dump in March, and then you had the parabolic, you know, rocket ship effect which is the same thing you have in the stock. Now, the reason that concerns me is because there's multiple stocks that are putting in very similar patterns with these huge parabolic climbs. You think Bitcoin was parabolic. There's, I've talked about this in previous videos. Plenty of stocks are even more parabolic than Bitcoin. Bitcoin rose 988% from its March low to its January high so far, right? But you take a look at this stock rose, ready for it, 1,939% from its March low to its January high. So this stock rose more than double what Bitcoin rose. And if you go and take a look at a stock like Blink, right, you're going to see some very similar price action. Now, this one didn't have the bubble, didn't have the fractal going on, but as far as the price action from March until now, again, this was a stock that was actually struggling, and then all of a sudden, out of nowhere, the stock pumps 4,528%, which is more than 4 times as much as Bitcoin. You take a look at a stock like Tesla, right, which of course is a major cap stock. It had this huge pullback back in March of 2020, like most stocks did. And since then, this thing has actually ran up 1,161%. Again, more than Bitcoin. You take a stock like NIO, which is, I believe, an electric car company out of China. And again, hit its low back here in March, not its all-time low, but a low back here in March, had this pullback, right? And since then, it's up 3,074%. These are not normal occurrences in the stock market. I know that if you're a cryptocurrency trader, you might think, well, who cares? Alts do that all the time. Yeah, they do, but stocks don't typically do that. Not major cap stocks, right? We're not talking about penny stocks here, right? Like a stock like Tesla, I mean, that's a really big deal. Of course, that made Elon Musk the richest person in the world. But we're seeing a lot of the same type of price action where a lot of these stocks had these big 2017s or big 2018s, crashed, had a really nice pump like Bitcoin did last year, had this huge dump in March like Bitcoin, and then had this absolutely parabolic growth in 2020. And it's really kind of scary because if you start looking at the fundamentals behind the stocks, for example, with Tesla, I read something recently that said that for every car that Tesla sells, their market cap is about $1.3 million, right? Which obviously is unrealistic. I believe the statistic was more than 100 times that of a company like GM, General Motors. So these stocks, a lot of them are, incredibly overpriced. They're overvalued, and they've lost touch with reality. Now, I think a lot of that has to do with this new type of investor in the stock market. A lot of people are jumping into stocks through apps like Robinhood, for example, and they're wildly speculating. They're not investing in companies based on the value of the company. They're investing in stocks based on which one they think is going to make them rich. They're chasing gains. And when people start chasing gains and doing heavy speculation, that's what creates a giant bubble, right? We've seen that in crypto time and time again. People chasing gains pushes coins well beyond their value. Wait, what's the word whale? It pushes coins well beyond their value, and the coins end up crashing 80-90% and coming back to reality. I think we're going to see the very same thing with the stock market. I still believe that firmly. I don't know when it's going to happen, but I do believe it's going to happen sooner rather than later. And we've seen in the past that Bitcoin, cryptocurrency, and Bitcoin specifically, does not fare well when the stock market is doing poorly. And we saw this just as recently as last week when the Dow started to show some signs of weakness. We had a really big sell-off in Bitcoin, right? So this idea that Bitcoin has somehow broken away from its correlation with the stock market, I find it utterly ridiculous, right? I do not believe that Bitcoin is a store of value. I've said this time and time again. I believe that Bitcoin is a speculative asset, and if you play it right, I believe you can make life-changing fortunes trading Bitcoin. But I do not believe that you should drink the Kool-Aid and say, well, this is a safe asset, it's as safe as gold, because I think that's absolutely ridiculous, right? So if we start seeing these stocks that are enormously overbought, right? Enormously overvalued. If we start seeing that stock market take a 20 or 30% correction, I think we've got to realize that the last time the stock market corrected 30%, Bitcoin fell over 50% in 1 week, right? And then we have to start talking about the reality that it's very possible that the stock market is not going to correct 20 or 30%, that it's actually going to correct more like 50%. And then we have to say, well, if Bitcoin fell 50% in a week when stocks fell 30%, and by the way, the week that stocks fell, they didn't fall 30% a week. It was an ongoing issue, right? They only fell like, I don't even remember what it was, like 10% in March. Let's go back and look. Look at this. This is the week that the Dow fell back in March 9th, and it fell, okay, excuse me, dead wrong. I wasn't thinking it was that bad. So it did fall 35% in a week, right? And in that same week, of course, we know that Bitcoin fell. That same week, Bitcoin fell from open to low 52%, okay? So, again, what happens if the stock market falls 50%? Well, I think we could see a 70 to 80% drop in cryptocurrency, right? Does that sound crazy? Yeah, probably a little bit, but I think at the end of the day, people are oblivious. They want to ignore, possibilities. They want to pretend that, it can't happen. And I'm not saying that it's guaranteed to happen, but it's very dangerous to believe that something can't happen. It certainly can happen, and I think it's important to plan for it. Now, at this point, I think it's a wait and see type of game. There are some signals coming in on these markets. One of my proprietary signals came in last week showing that it was time to short the stock market. I don't short stocks on positional trades. I only short them on day trades. So I didn't trade that signal, but it was something that kind of gave me a heads up. Hey, be aware of this. Also, if we look at the dollar, right, the dollar has started to bounce back some, which is surprising to me considering that they just continue to hand out free money in the United States like it's going out of style. But I won't go off on a tangent on how much that pisses me off. It's up about 1.88%. And if we start looking at some indicators and things, we can see that it did have a fairly significant bullish divergence here. We had RSI down around 30.26. Over here, RSI is down around 32, but price was obviously making a much lower low. So we did have some bullish divergence. So maybe this is just some kind of dead cat bounce on the weekly. We'll have to wait and see. It is a little bit suspicious that it was trying to put in this double top and then basically stopped right at the neckline. So again, that could be a signal that it's going to basically be a bear trap and move up from there. If we look at a 3-day chart, again, we had a running divergence there. If we look at a daily chart, it's broken back above 50, so it's back into what would be considered bullish territory on RSI. It just looks, and we don't have volume on here, but this almost looks like some type of wonky inverse head and shoulders. It just looks like the dollar is poised to say, hey, I want to take back some of what I gave up. And I'm not saying that it's bullish in terms of, hey, the dollar is going to new all-time highs, because quite frankly, the dollar still looks pretty rough. But you have to realize that in 2020, from March until the bottom in December, the dollar actually lost over 13% of its value against other major currencies. That's a really, really significant drop, and it wouldn't surprise me at all to get some type of bounce. We know that in the past, when the dollar has been strong, that's been a bad sign for Bitcoin, right? Even if we were just looking at a bounce to the golden pocket, for example, hypothetically, that would put the dollar back up around 97. Seems unlikely, but again, just a possibility that I want to keep in the back of my mind if that dollar starts showing strength. Again, fundamentally, I don't know how that happens when you have the U.S. just printing. End of day, I still firmly believe that we are in a giant bubble, not just in the stock market, not just in crypto, but just everything. I think everything is going to end up, being a historical event where they look back and say, this housing was out of control, the stock markets were out of control, this cryptocurrency stuff was out of control, and you start looking at the statistics, and it's scary. It's scary, right? The amount of margin that's going on right now, I read an article the other day, I believe it was, I don't remember the number now, it was either 9 times higher or 4 times higher than what it was at the peak of the last 2 bubbles, right? People trading on margin, basically speculating with money that's not theirs. Again, that's bubble, mania type of behavior. You had an article that came out, had JP Morgan was talking in the article about Bitcoin going to $146,000. So you had a lot of people in cryptocurrency that just took that one segment of that article and went out and said, well, JP Morgan thinks it's going to 146K, you'd be stupid to sell Bitcoin. But what they didn't ever talk about was what the article actually said. And JP Morgan did say, and they did in fact say, that they felt like it could go to 146,000. But in that very same article, they also said that it would need to significantly decrease its volatility, which we're not seeing. We're seeing an increase in volatility. They also said that buyers should be aware of market mania, speculative mania, because they feel like this went too far too fast, right? And that it may have some type of deep retracement before going higher. That's the idea. And they also said that they did not feel like 146K was a reasonable or sustainable target for 2021, right? Well, if you are trying to play this like past quote unquote cycles, the idea is that this will top in December of 2021 at $100, gajillion dollars or whatever, crazy target people are putting out there. But even the analysts who are calling for these large targets, not all of them are on board with this being a short-term victory. A lot of them are thinking more in terms of 5 or 10 years out. And if you asked me, I would be much more open to that idea of, hey, Bitcoin would be worth $150,000 in 2030, right? Do you think Bitcoin will be worth $100,000 by 2035? I'd say probably. Do you think Bitcoin will be worth $1 million by 2035? Probably not, right? I think you've got to draw a line somewhere. If Bitcoin survives long term, yeah, I think it could eventually become a store of value. If it survives and if the speculation dies down and regulation comes in and takes care of this heavy manipulation, a lot of things has to happen, right? But in the short term, I am certainly not, bullish on Bitcoin. Other than trading it, I don't want to be sticking a lot of my net worth in Bitcoin and trying to quote unquote store my value there. Right, so that's my opinion. It's just an opinion. Obviously, I could be wrong. I've been wrong before. I will be wrong again. I'm wrong all the time. That's just part of trading. But the one last thing that I wanted to leave you with, these last couple of videos, I've been trying to do these trade lessons. So I wanted to go ahead and stick another trade lesson in this video. I stick them at the end. That way people get rewarded for watching the video, right? So what I want to show you guys is just a really simple thing you can watch. Okay, and this is, we'll do it with Bitcoin. This is not rocket science. I didn't invent it, nothing like that. But, people will often disregard simple strategies because they think, well, it just can't be that easy. But the reality is simple strategies tend to work better. And as far as, my trading goes, I look out at these people who are doing this crazy systems and they got 800 indicators on their charts and they've got all this thing going on and they're talking about deltas and alphas and gammas, and I'm like, that's all fine and dandy and maybe that works for them. But half the time I think those people just like to pat themselves on the back. It's like an ego stroke. Look how smart I sound. Look how smart I am. I got all these indicators. One of the first people that I learned about trading from was a Wall Street veteran who said that the more indicators a person uses, the weaker trader they are. Now, there's always exceptions to that rule, but typically when people are using a ton of indicators, it's because they lack confidence and they're trying, they're hoping that by having all these indicators, it's going to tell them what to do, right? So let me just tell you, I trade very simple setups, right? The setups that I trade, I can't share in these videos for free because that's what I charge for. People have paid me a lot of money for those, but I can share some really simple stuff that I used before I created my setups, and I still use these in addition to my setups. So here's one example. You take a 4-hour chart of Bitcoin. Every coin, every asset has a magical line, if you want to call it that. And they have these moving averages that work best for that asset. And if you spend enough time watching that asset and back testing on that asset, you will find those magical lines. In Bitcoin's case, the 4-hour 50 moving average has been a quote unquote magical line over the last 3 or 4 months. Now, it's not always magical. It changes over time. This happens to be the line that's worked well the last 3 or 4 months. I've talked about this in many videos, okay? But let's just go back, for example, back here in December. We tested it, we tested it, we tested it. We couldn't break underneath it. So a person could realistically say, you know what? I'm going to take a long here because I believe that this line is holding and I believe we're in an uptrend. And if they had taken a long back there and set a stop loss at this previous low back here, it would have been about a 2.5% stop loss roughly. They would have had a profit target that looked something like this, up around 5%. And there you go. There's that trade. And if they rode that trade, right, and we're a lot of hypotheticals. We're not going to talk about how to ride trades and when to get out of trades and all that. I'm simply showing you the basics, and you can kind of expand on this on your own time, or you can join my trading course if you'd like to learn, more details. But you take a trade like this, and even if they got in and out, boom, almost 5%. If they had rode it to the very top, which is unlikely, 81%, right? If they got out anywhere between there and there, anywhere from 5 to 80%, right, on that trade, based off of a very simple moving average. Same thing. You come over to January, we came down, we tested that moving average, we closed up above it. If somebody had taken a trade here, this would have been a little tougher trade to take. You would have had to zoom in, probably look at some smaller time frames and stuff. This is not a trade that I would have taken. But again, they could have pulled this down, 10% stop loss, 20% profit target. That by itself would have made me say, I don't know about that. I don't like those types of profit targets, those massive profit targets, right? Because they don't always hit. Nothing always hits, but they're less likely to hit. So maybe a trade like that. But instead, what I would do in this situation is I would wait, to see if maybe it gets tested again. It didn't, but if you look over here, and I've talked about this in previous videos, it did put in a beautiful double bottom, right? So as soon as it broke through this double bottom, now you've got two reasons to get into a long position. Well, we tested the 50. The 50 held its support. It didn't give way. That makes me kind of bullish. And oh, look, we just confirmed a double bottom. I think I'll go ahead and get long here. And then you can do a trade that looks something like this, right? Again, still a fairly large profit target, so it might be a trade where you want to take a smaller position. But there it is. There's the trade. Somewhere between 14 and 30% on the upside. You come over here. It gets tested. Right, again, really long tail on this candle, so this is something where I'd probably want to wait for more confirmation, and the very next candle breaks through, avoided a major loss, right? Not necessarily a major loss, just a loss like any other trade. Right here, you get this bearish retest. Now, we've talked about this in previous videos. You come down underneath the line of support, and you come up to hit it from underneath. That is a bearish retest, and more often than not, you will get more downside, right? There it was. Boom, close. It's a very bearish looking candle, right? That's a candlestick that you can look up in Google. It's a bearish candlestick. It also tapped that line of resistance, didn't break through. So you can get into a trade that looks something like this, 6.5% stop loss. You're going to have about a 13% profit target, and the trade is going to look something like this. And you can see the trade didn't work, right? The trade would have failed because you would have been stopped out here. But it also depends on how you trade, right? Maybe you would have said, oh, you know what? I got a tail here. I got another tail here. That's, I'm going to go ahead and get out. And me personally, if I see a bullish reversal signal like this here, I probably would have got out on the close of that, 5%, 5.5%, right? Another retest here. Same thing, more downside. Break above it. Here's a bullish retest. Break above, retest, more upside. There you go. Right there's your bullish retest, more upside. Right here's your bearish retest, downside. Again, very small downside, probably would have actually been stopped out of that trade. And then over here, we just tested again and more downside. And I'm showing you this in a very condensed, super 30,000 foot view. But typically what you want to do, or what I would do in these situations, is when these are being tested, when you're testing a 200 moving average or a 50 moving average, I want to actually zoom in. Okay, well, right here on this 4 hour, I'm testing this moving average. What's my hourly chart look like? What's my 15-minute chart look like? What's my 5-minute chart look like? Do they look bearish at the same time of this bearish retest? More often than not, you're going to find that these signals will actually support each other. And then instead of waiting and shorting this thing way down on the close of this candle, it may be possible that a person would get short somewhere way up here, right? With a very small stop loss, 1 or 2%. And then bam, you've got this huge 15, 16% downside, right? Very simple stuff, guys. It's not rocket science. It's not what people make it sound like. Oh, you got to be the smartest person in the room, and oh, you need 38 different indicators. It's simple, right? The reason people lose money trading is because they get emotional about the trading. They start to be afraid oh my gosh, what if I'm wrong? Or they go the other way, they get cocky and think, oh no, I can't be wrong. And then when they are wrong, they don't close the trade, they just let it run against them and run against them and run against them, hoping and praying that eventually it's going to come back their way and let them out of the trade. And more often than not, it actually will come back their way and it will let them out of the trade if they're trading with the trend, right? But what happens is eventually there will be that one time where it doesn't come back and they lose everything, right? There's a strategy called the martingale strategy that basically says that if you are wrong, just wait and double your bet and double your bet and double your bet. And eventually when it goes your way, you'll be able to get out for even or even a profit. The problem is statistically they've tested this, is eventually, there will be that one occurrence where it just keeps going and then you blow yourself up. So for example, let's say that somebody was shorting Bitcoin back here at, 10K, right? And it went up to 12 or 13K. And they might have thought, it's okay, it'll correct. That's probably the top. It's probably going to come back down to 8K and I'll get out then. Well, then it just keeps running up and they're hoping and praying, okay, well, I'll just cost average it, 20K, it's probably going to correct now. So I'm in at 10K, I'll short at 20K. Now my average is 15K. Surely it's going to come back down to 15K, but it didn't. It just kept going, right? And that's how you end up blowing up an entire trade account, right? And people will do the same thing when this market turns over and starts to head down. They'll start trying to long a bounce that turns out not to be a bounce, but a falling knife instead, right? A dip that's actually a falling knife. And they'll keep adding and they'll ride that thing all the way down. The one benefit is if they're buying spot at the very least, they'll still have that spot at the end of the day and hopefully they can ride it back up someday. But, that's the way people trade. They get emotional, and that's what makes people lose. Okay, trading is not complicated. If you go back, I'll show you a dead simple strategy. Well, I already showed this double bottom strategy. So, there's just so many really simple things that I don't see anybody talking about on social media. And they're all trying to come up with this newfangled stuff and, well, look at me and look at this and look at that. And, it's great for your ego, but it's really bad for trading. Just stick to the really simple stuff. Draw some trend lines on your chart. Watch some very basic. The 50 and 200, those are pretty standard moving averages, right? Or if you take a look at Bitcoin, here's a couple of moving averages you want to watch. Now, you want to know how I found these moving averages? Man, I did so much testing and I'm such a genius. I figured out that the 12 and 26 were really magical. Yeah, I'm being sarcastic. These are the standard moving averages on Coinbase, period, right? There's nothing magical. I didn't discover them. It's the only ones Coinbase offers. If you're trading through Coinbase Pro's platform, their chart offers two moving averages, the 12 and 26. So, of course, what happens? If people are trading there and they're new traders, they think those are important lines. So they trade those lines. Well, look what happened back here. Tested it, up it went. Uptrend, tested it, up it went. Tested it, up it went. Tested it, bounce, right? Now we're actually underneath it, so if it starts to come down, it'll do the opposite. It'll ride it going down, right? Watch this, go back in time. I haven't done this before the video, but fairly confident it'll work. There you go, right? Come down, test it, more downside. False break, down, bearish retest, more downside. Bearish retest, downside. Bearish retest, downside, right? It's not rocket science, guys. Put some lines on the chart and follow them. The real key to trading is, number one, stay in control of your emotions, and number two, use proper risk reward, right? Understand that you're going to be wrong. When you're starting out, you're probably going to be wrong at least half the time, maybe even more. But if you're using proper risk reward, a lot of times when you're right, you're going to end up making 3, 4, 5 times what you're losing when you're wrong. You want to get into a trade with 2 to 1, but you don't want to automatically close it as soon as it's 2 to 1, right? You want to try to ride those profits the best you can. So a lot of times you might get into a trade where if you're wrong, you're going to lose, let's say, $50. If you're right, you're going to make minimum $100. Well, if that trade runs your direction, you might make $400, right? Well, now you can lose 8 trades in a row and still be even. So I think I'll go ahead and wrap up there because we're approaching the 40-minute mark. I got a little bit of editing to do. But yeah, I hope you guys enjoyed this video. My opinions on Bitcoin. Just a lot of chop right now, and I think it's really great if you're a trader. If you're an investor looking at the long-term picture, or at least the next picture for the next few weeks, I'd say be mindful of the fact that we have a potential double top that's not yet confirmed. And other than that, maybe slap some moving averages on there and pay attention to where those suckers sit at. One last thing about moving averages. Don't forget that in terms of the the weekly, the 19 is that magic line on the weekly for Bitcoin, and that sucker is way down here at 23,000. Oh, sorry, it's supposed to be a MA, not an EMA. So the 19 MA on the weekly is way down at $20,076, right? So in bull markets, that line tends to get retested. Also, don't forget that in terms of RSI is sitting up around 85.97 on the weekly. People will say, oh, well, RSI can stay overbought in bull markets. Well, of course it can, right? Anything can happen in bull markets. But if you look at previous bull markets, that's not how they tend to work in Bitcoin. They tend to have major corrections and come back down to around the 50 to 55 level on RSI. And then they tend to bounce back up and then retest it, bounce back up and retest it and bounce back up. Just like here, we broke above it, we retested it, broke above it, retested it, and boom, right? So I would suspect that even if this is only a correction, that this will probably come back down at some point sooner rather than later and test this midpoint on RSI. Got it? All right. I'm going to go ahead and wrap the video up there. I hope you guys enjoyed this. I know it's been a while. I will try to shoot at least one more video before the end of the month. But if you want more access to more frequent updates, don't forget you can join that Patreon and get daily updates. They're not always videos, they're mainly charts and things, but I do daily updates for just $7 a month. All right. Please remember that I am just some guy sitting in a spare bedroom, so nothing in the video is financial advice. You should always do your own due diligence and seek out professional financial advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency, the stock market, or precious metals. If you enjoyed the video, please be sure and give it a thumbs up. Make sure you subscribe to the channel, and don't forget to check that description, again, for links where you can join the Patreon and also links where you can join my trading course if you'd like to learn my proprietary trade setups and more about how I trade. This is James with Crypto Common Sense, reminding you to please trade safe.